Hi there everyone, this is Steve Miley, the market chartist for FX Explained, again in here with our regular weekly macro watch update for the week commencing the 1st of March 2021. Higher yield surge sees stocks plunge and the US dollar rebound. First of all, we're going to take a look at those macroeconomic and geopolitical developments that we've seen in here over the past week as we move through the end of February. Well, really, there was very little on the actual macroeconomic developments in here and on the geopolitical side. The market price action, though, was very volatile. And we're going to come to that in more depth as we go through into our later section. But in here, the real driving force, the real thing we're seeing in markets in here over the past week have been a further global yield surge. We already talked about this in last week's a macro watch. Yields surging higher. US 10-year yields you can see in here having previously in early February accelerated above the 1% level. 10-year yields in the US now above the 150 level last week. And so this significant surge in yields we've seen in 2021, particularly in here through February, having had that high yield move at the beginning of 2021, is all pointing to a further higher yield pressures. And it's reflecting concerns around reflation, but more importantly, inflation and potential for interest rates globally to go up sooner than anticipated. So this has been the big driving force over the past week as opposed to the macro fundamental side, but we'll talk about that again a little bit later. And then the knock-on effects were then stocks were worried about the higher inflationary pressures and potentially higher interest rates, and then the dollar in here benefited as we went into a risk off mode. So risk off in here, taking the US dollar back higher as a safe haven. Elsewhere, though, we did get President Biden's COVID relief bill progress through the House of Representatives at the very end of last week, the end of February. And throughout Europe, the vaccination program is starting to improve, having had a slow start. Still lagging behind, though, the solid vaccination program we're seeing in the US and the very impressive UK rollout of vaccinations that are continuing into now through February, now going out into March. Global lockdown measures and the vaccinations are having an impact in here on cases globally, with falling cases, hospitalisations and deaths. And the UK Prime Minister on the back of this has outlined his roadmap out of lockdown with the possibility of the UK relaxation of legal restrictions by June. So let's take a look at those global financial market developments for the end of February, for the week ending the 26th of February. Well, as I said before, that global higher yield move, concerns about reflation and inflation in here, seeing bond markets, not just in the US, but globally sell off. Europe, UK, throughout Asia and Australasia in here, seeing significant moves higher in yields. And on the back of that, then we saw equity markets wobble, chopping down and back higher again last week, but eventually ending the week fairly negative in here. So here we see the S&P 500 and the growth stocks doing particularly badly in here. So the Nasdaq hit, the growth stocks are not benefiting as much from the potential inflationary pressures. So we're seeing in here a top going in place potentially for the Nasdaq. So those growth stocks, particularly tech stocks, leading the way lower in here, with value stocks doing a little better, but still ending the week more on a back foot, on a more negative theme. The US dollar was a beneficiary at the very end of last week, having been actually weak earlier on in the week, and from throughout most of February, we have seen the dollar rebound, trying to resume the whole recovery effort that we've seen in the dollar since the beginning of 2021. And this is the US dollar as a safe haven. As we've gone more into a risk-off theme, the US dollar potentially going to be pushing still higher as we go through into early March. And so what else did we see then? We saw the dollar rebound, meaning the EUR USD went lower. So most currencies lower against the dollar at the very end of last week. We saw this plunge lower Thursday through Friday on euro dollar. And the pound, which has been super strong. We've been watching the pound, not just the rally from 2021, but the rally from October last year. And that extended above 142 this week, having broke just previously the week before above through 140, up through 142, but a significant correction lower, back below that psychological 140 level Thursday through Friday last week. And it's not just against the dollar that the pound has weakened. The euro versus the pound rebounding, having had this significant sell-off since the beginning of the year. That sell-off in here both be due to the Brexit actually going fairly well, post-Brexit negotiations and post the Brexit separation has actually gone fairly well. So we're seeing euro pound lower, and also the fact that the vaccination program in the UK has gone well. But the last 48 hours in here of last week, we did see a significant rise higher for euro pound. So not just the pound weakening against the dollar, but the pound also weakening against the euro. And the risk currencies all got hit. Australian, New Zealand, Canadian dollars amongst the majors in here. Thursday through Friday, a significant plunge lower here for Aussie dollar. But we also saw, as I say, similar for the Kiwi dollar and Canadian dollars, pushing lower against the US dollar as the US dollar surged higher, and we switched more into a risk-off theme. In the commodity markets, oil continued to push pretty much to the upside throughout last week, but did get a correction lower as we went into that risk-off theme on Friday, where the commodity and the other commodity areas, copper significantly moved back lower Thursday through Friday, having been on that surging rally through February, and then also gold in here reacting very negatively to the US dollar strength, having been vulnerable throughout 2021. Gold plunging lower in here at the end of last week to new multi-month lows in here, and gold looking vulnerable to further losses. So let's now take a look at the week ahead, commencing the 1st of March 2021. Well, first of all, President Biden's COVID relief bill moves to the Senate, so we're watching for further developments there in the coming week. We're going to watch for further lockdown updates. Are there going to be any relaxations? Or as we've seen in France and Germany, we've actually seen some localized lockdown, more restrictive lockdown measures as we've seen pockets of outbreaks in those countries. As ever, we're monitoring the cases, hospitalizations and deaths staying very much in the spotlight of COVID-19, and also watching for any developments on any vaccine updates, a better rollout of vaccine programs, or new vaccines coming to the market in here, and also the vaccines being passed, Johnson & Johnson in here being passed in the US for administration last week. On the central bank side, what do we have this week? Well, the Reserve Bank of Australia interest rate decision, press conference and announcements and statements come on Tuesday. And we have Jerome Powell of the Fed speaking on Thursday. And overall on the global market side in here, we've got the manufacturing PMI data on Monday, plus German CPI. We had that RBA interest rate decision statement and press conference Tuesday, along with German retail sales and unemployment, EU CPI and Canadian GDP. Australian GDP comes on Wednesday alongside the global market and US ISM services PMI. So manufacturing PMI Monday, services PMI on Wednesday, and with the US ADP employment change data, the precursor to the employment report, which we don't get till Friday. Thursday, we get the EU retail sales and the ever weekly US jobless claims. And as I said, often the very much watched and the key piece of data for the month, the US employment report, brings us to Friday and the end of the week. I'm going to wish you all a great trading week. Please do continue to stay safe out there, and I'll be back with you very soon for another Macro Watch. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.